welcome back to the best pro for you trading flow. Today we are looking at BTC. If you remember our previous breakdown, the link will be in the description. We discussed the critical technicals. Today Bitcoin is bouncing. Well, it's following a bounce, to be fair, and it's been driven by two massive catalysts. First, risk appetite is back. Nvidia just released blowout earnings, smashing expectations. And second, the Jane Street effect. There is heavy speculation that the high frequency trading firm Jane Street halted its suspended daily 10 a.m. algorithmic Bitcoin sell-offs after being hit with a lawsuit from Terraform Labs. Less institutional dumping equals a cleaner path for a bounce. So if you're trading a prop trade challenge, this fundamental shift is your green light to look for longs, but only if the structure holds. Let's jump into the 3-hour chart for BTC. So we are today also using the volume profile to see where is the POC, as well as the value area. The value area typically is the one that is highlighted with a more visible yellow coloring here, and it is actually come to the previous high of 70 that we reached overnight yesterday. And on the downside, we go down to around below the 66K, which interestingly enough comes at the same level as the median Bollinger Band. So this becomes a very important level. But here is where prop traders need to be careful. Okay, we have a pullback currently to the downside, and if we did measure that upside from 62.43 to 70K or so, then we do see that our medium band comes between the 50 and 61.8 Fibonacci retracements. So the 61.8 currently sitting at 65,350 is a very important level to take into consideration. While it is possible that this level holds a support, let's not forget a key rule. When Bollinger Bands flatten, and currently we see some sort of flattening indication, and the media line, of course, is the one that we have to pay attention for currently, price often mean reverts all the way to the beginning of the trend. That means that if we do lose that level in the 61.8, then we could potentially go down to 62,430 once again, and that would increase the chances of further breakdown, or perhaps we're going to see another move to the upside that will form a local double top. And then from there, of course, we'll have to wait and see how this is going to pan out. One way would be to see this turning back for a confirmed range and then back down again, and then either up or down, or the other situation would be that we're going to see just a short-term bounce and then we're going to break to lower territories, probably go for lower than the 60K to be fair, just to take out everybody that has placed the stop losses just below that liquidity point. So the first scenario, of course, that we're looking here is that if the first of all prices fall to the 61.8 and it holds, or any of the price area from the current prices down to that level holds, then the bias remains bullish. We use the Fibonacci expansion tool from the bottom to the currently we're going to use the current low at 66,480, but obviously if we come lower down, we need to adjust our point over here. This brings us to the 61.8 being at 71,230 and the 100 Fibonacci expansion at 74,160. The 61.8, interestingly enough, brings us to the 61.8 Fibo at 70K, which is the previous stop, and the 100% brings us very close to the previous stop that we saw back on February 8, close to, right? Just I say close, why? You might say 72K, 73K. Yes, 1K for Bitcoin isn't really anything these days. So these are the levels. And what we could do is actually confirm if any of these levels are a cluster with any of the other Fibonacci's from the longer term format. And we're looking at 71,600. So the 38.2, it's probably going to be a much stronger resistance than the 61.8 or the 71 or the 73K here, because it comes from a much larger trend. Okay, so pay attention, 7160 and 75,300. Now, the fundamentals, of course, remain bullish for now, but we don't know whether this continues. Now, the second scenario, is if we do lose that 66 level, yeah, And flattening bands also suggest a drop all the way back to the start of the trend at 62k. Okay, and if that happens, that the chances of sweeping the February 6th low below 60k are going to increase significantly. So just a parenthesis here, Nvidia report was positive, but investors weren't really surprised, weren't really actually satisfied, I would say, with the fact that Nvidia said they would reinvest instead of giving back to investors. And that was what stopped the rally. So it might just be a sort of bull trap over here. Pay attention. And if you do go in, don't forget to have tight stops. Don't run the breakout. Let the market prove it can hold the 66k. Trade the levels, protect your daily drawdown, and let the structure guide you. This is best pro trading for you. Trade smart, and I'll see you in the next breakdown.